Morning everybody, and this is your S&P 500 day trade setups for today. So we tagged the top of the, I suppose it's a channel at the moment, but basically a trend line. We tagged the top of it and we bounced off, and then we've got buyers coming in again. So buyers, moved all the way down, and then buyers came in off the bottom. So it's 2 8-hour bars yesterday where we have buyers. We've got a crossover brewing on the oscillators at the moment. And bear in mind, this is an area of weekly support, so as far down as there. So this 42.51 is definitely an area where there is support. I do like the way the oscillators are looking at the moment. Really like the way the oscillators are looking. So that just gives me an indication I need to keep my eyes open on the weekly, because there is potential for a reversal. Now, we are obviously being driven by politicians and egos at the moment, so you just need to be cautious of that. Some of these politicians are worse than peacocks, and trying to fluff out their tail feathers at the moment, at the risk of the normal person. So for me right now, this week has been big up, big down, big up, big down, big up. So complete confusion. Look at the 3-hour oscillators here. We have diversions on the top. So there's high, lower high, high, higher high. And then also we're in a bit of a triangle. So I suspect we are probably looking to the downside still. So I don't see a potential bottom just yet. This could be a range, or it could be a double bottom. So we'd need to get above 43.60 and find support there before I start looking at that. Moving averages are still quite far apart on the hours, so favors the trend to the downside. I would be looking for an area to bounce off, and we are sort of exactly in that zone right now. So this is the area I'd be paying attention to, which is 43.26 area. Now, the way to do this is going to be on the 15-minute as per all the indexes right now. Look at how the moving averages have grouped together. I'm missing a bit of data this morning for some reason, but just mucking around here in this in a little channel, or in a little range, should I rather say. Oscillators grouped to the upside. This is definitely something to pay attention to, and what I would be doing is just waiting for a break and retest of 4300 or 4312. We need to get back below 4300, and then you're looking at 4250, and if 4250 goes, then you are definitely looking at 4200, and then 41, and then 4000. So that's kind of the narrative, but for now this is kind of sideways. Now, yesterday, I just want to highlight something here. It wasn't exact, but I gave you the gap here. So this was the trading for the day. Oh, sorry, this was the holiday trading. Okay, this was Monday. Market was closed, so futures was open. Nice structure that we had for a short there. But then when the market opened again, this from there to where the market opened would have been a weekly gap, and it would have been targeted, which it was. It was targeted here, sold off it, and this is where the bigger, smarter money was hunting stop losses. So the whole purpose of this is, where would my stop have been for that trade? And it would have had to been above this swing high of this day. You could have put it up on above the holiday day, but the logic is up there. And you can see, try to hunt the stops, so that was hunting the stops that were close by, and then we fell off. If I adjust this level to the nearest swing low, there's the nearest swing low, and then to the nearest bit of structure, which is right here, you can see that's kind of where we were. So again, guys, it's just my view on things. That's why I always look for 3 levels in the area that I'm looking for, and I watch price action. This would have got me got me short inside bar and a pin bar here. So on the break of the structure, which would have been on the pin bar there, but a stop above the pin bar would have been taken out. So this has often happened. So that's why I often say to you, especially when we are all over the place, take the trade, but move your stop above the previous high. So basically means your risk is lower. So smaller position size and lower risk. Anyway, so for me, I think this sideways chaos is going to continue. So you need to trade it accordingly. The high of yesterday is your stop area. So 43.63, 43.65 area is your stop area. And what you're looking for is a break to the downside. This trend line may hold. So just keep that in mind. This trend line may very well hold. So any break below 43.12 could get you an opportunity and then a nice tight stop up here. And just be prepared. Your risk is, your probability is probably 50-50 at the moment. It just takes one person to sneeze, or one politician, should I say, to sneeze, and this thing can move in either direction. So be wary of that. Keep your position size small, and if you're unsure, stay out. Just go do some gardening or go wash the car or something. Just stay away from it. You don't have to trade every day, and just keep your eye on those levels. Okay, so that's kind of the view I've got. Really sitting more on the sideline than actually paying attention to what's going on the charts, and then just really listening to the different narratives coming out of Ukraine, Russia, but also don't trust the media. So you have no idea what the media's agenda is, because they are not neutral. They are always got a bias. Anyway, that's kind of my view. Kind of sitting on the sides. Hope it helps, and we will see you tomorrow morning. Cheers for now.